Okay, so welcome back again. Fred Gleek here. And I wanted to talk to you. I mean, my whole area of expertise is in creating, finding equity partners and showing other people how to do exactly the same as I do in my 90-day accelerator program. And one of the things that I've been amazed by is how much people are confused by the differences between revenue sharing and equity. These are two extremely different concepts. So let me explain. And let me explain why you want to be trying to find equity deals and not revenue share deals. An equity deal is where not only do you share in the revenue based on the percentage that you decide on between you and your partner, again, called partners now, not called clients. It's very, very different than a revenue share in which you get a piece of whatever the action is based on the net or the gross of the dollars that you generate with that client. Again, notice the use of the word client there, not partner, because they aren't a partner. They're a client because you're getting a piece of the gross or the net for the period of time that you're working with them. Many people will confuse these two terms. I want you not to get confused because it's a very important difference and distinction, which is every deal that I do now for the last 14 years now, purely on an equity basis. I don't do any deals that are monthly, hourly consulting, or even revenue sharing. Now, why am I doing it that way? Because not only do I get paid, but in case I get, as we always say, get hit by a bus, if I'm dead tomorrow, my heirs, my kids will continue to get paid on the deals that I set up. So basically, if you have anyone that whether it's a partner or kids or anyone that you want to leave a legacy in terms of income to, this is a really, really good way to do it. So rather than spending your money, or in addition to spending your money on a life insurance policy, this becomes an ongoing revenue sharing. Now, one of the deals that I have, as it turns out, since I've set up myself as a trust for my corporation, is many, many years ago, I started doing what is now turning out to be, it's not really an equity deal, but it'll work this way if you listen to this. So GoDaddy, I set myself up as a partner with GoDaddy. Now, GoDaddy is giving me a revenue share, but the way that it's set up within my corporation will continue to make money every month from GoDaddy, even if I'm not here. And that will go on forever. Now, the only way that you can do and create yourself equity deals, and I was just talking with a good buddy of mine earlier, Jason Brubaker, this morning about this, about how about how you can only really do and work on doing equity deals if you have a certain amount of kind of base income coming in. So I don't encourage anyone to get involved doing equity deals unless they have an established business that's making at least 10, 15, $20,000 a month, because to do an equity deal, and I said it to Jason this morning, I said, I've done equity deals in which I've started the deal and I've worked for a year and made absolutely $0. So if you're going to be doing equity deals, realize that number one, there is a difference between equity and revenue sharing, and that's an important distinction. But also realize that your hit rate or your percentages, if you're talking in baseball analogies, you can't hit 1,000 with every equity deal you do. You will start and try to do equity deals with people, and you will put in a lot of time and you will end up with $0. And you can't afford to do that if you don't have a quote base salary or consistent income coming in. And the other thing I mentioned to Jason, which I think is important to share with you, is the fact that you can continue to take your existing business, if you're doing it right now strictly based on a monthly or an hourly rate or a revenue share rate, continue to do some of those deals. So that I said to Jason this morning, I said, well, let's say you get 10 people in the door. There might be only 2 people that you want to attempt to do an equity deal with, but you may be very happy to take the other 3 people. So 5 out of 10 that you're going to want to work with, but only 2 do you want to work with in an equity capacity. And the other 3, you want to do your traditional monthly rate, hourly rate, or revenue sharing, again, being very different than equity. So make sure as you're putting your deals together, that you understand the difference and you understand when to use each.